Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities rallied over the past week, driven by cooling US inflation data, boosting expectations of less aggressive policy action going forward, positive earnings reporting by large banks, and news of government support to the Chinese tech sector. The MSCI World, MSCI Asia ex Japan, and MSCI China indices recorded gains of 3.2%, 5.5%, and 6% respectively over the past week. Back home, Indian equities continued to scale new all-time peaks and extended gains for the third consecutive week, buoyed by positive global cues and strong foreign investor buying and positive domestic macro data. After a mixed start, the Nifty index rallied strongly on Friday to post a weekly gain of 1.2%. Broader markets continued to outperform Nifty index, with the Nifty mid-cap index and small-cap index up 1.3% and 1.8% respectively. Among sectors, IT, metals and telecom led the rally with gains of over 2%, while utilities was the worst performing sector with cuts of around 2.7% for the week. The Indian fixed income market took a breather last week as government bond yields fell across the curve, as sharp reversal in US bond yields amid lower US inflation data negated the impact of higher than expected domestic inflation. The US bond yields fell around 15 to 20 basis points, while the 10-year Indian government bond yield fell 7 basis points to close at 7.09%, while the 3-year and 5-year Indian government bond yields fell by 7 basis points and 6 basis points respectively. The INR appreciated 0.7% against the USD to close at 82.2 per dollar as robust foreign investor inflows, weaker US dollar, and a sharp fall in US bond yields negated the impact of higher crude oil prices. Brent crude oil fell sharply on Friday amid profit booking, but still clocked a weekly gain of 2% to close at USD 79.6 per barrel after supply disruptions in Libya and Nigeria heightened concerns that markets will tighten in coming months. Among other macro updates for the week, the first was on India's consumer price inflation, which accelerated for the first time in 5 months to 4.8% year-on-year in June 2023, from an upwardly revised 4.3% in May, and above market forecasts of 4.6%. The surge was mainly driven by food inflation, which rose to 4.99% from 2.91% earlier, with strong gains reported for cereals, pulses, and milk, while the moderation in cost of vegetables was marginal. Meanwhile, prices rose for fuel and light, housing, and for clothing and footwear. The second data was on India's wholesale price inflation, which contracted 4.1% year-on-year in June, compared to last month's contraction of 3.8% and market estimates of 3.6%. It was the third consecutive month of deflation and the steepest contraction since October of 2015. This was driven by a decline in the cost of fuel and power and primary articles mainly. On a monthly basis, the WPI fell 0.4% in June, recording the third straight month of decrease after a marginally revised 0.99% fall in the month of May. The third data was on India's industrial production, which rose 5.2% year-on-year in May 2023, accelerating from a 4.2% growth recorded in the previous month and market estimates of 4.8% growth. This improvement was driven primarily by mining sector activities, which surged 6.4% after a 5.1% growth in the month of April. Also, factory activity improved 5.7% versus 4.9% in the previous month, while electricity generation rebounded to positive from a contraction of 1.1% last month. Finally, the fourth data was on India's merchandise trade deficit, which narrowed to 20.1 billion in the month of June 2023, lower than the deficit of 22.1 billion in the month of May 2023 and in line with market expectations. Exports was down 22% from the previous year, reaching a value of USD 33 billion, the lowest level since October of 2022, as external sector demand remained weak due to a slowdown in the world's major economies. Meanwhile, imports declined 17.5% to USD 53.1 billion. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, Reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.